button on the GoToWebinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. Today is November 7th. It's Thursday, and we're going to do another episode of CFRN Thursday, where we break down the CFRN trade setup in slow motion. The platform that I'm featuring is the DtPro platform. That's the platform that both Michael and Dwayne use. You guys have access to it, so if you're brand new and you're on trial and you're listening to this recording, you have a chance to download the indicators and download the platform at the same time while you're on the trial. If you run into any snags, you guys know you can call me. I'll probably reach out by email and say, hey, I'm your contact person. So again, you'll have some one-on-one training with someone that's been around the room since day one and knows the platform, knows the setup. So again, if you run into any snags, just call me at the desk, okay, or shoot me an email. But to go over what we're going to cover this afternoon, number one, we're going to go over the trade setup, okay? So this is the same setup that Michael is doing in the training room. If you're brand new and on trial, this is a good cheat sheet or syllabus for you to lean on. So the method, the rules, some of the buzzwords that I go over are going to be the same ones that Michael used. So the idea of this is, the goal really is for you to help you absorb what's going on while you're on the trial. So at the end of the trial, when you get an offering from CFRN, you can make an educated guess whether you want to push the PayPal button or not. All right. Also, I'll give you a chance to ask questions, and it will also set expectations. Hey, this is what I'm signing up for. These are my expectations, that kind of thing. So we're going to lay the groundwork for you guys so you guys get a full understanding, okay? Then after that, we'll go inside a live market, just like Michael does. And what I'm going to do is I'm going to look at the same, what we've gone over here, gone over in the trade setup. We're going to look for them in the market. But I'm going to, again, do it in slow motion. So I'm going to give you a chance to, I'll draw some trend lines. I'm going to go over the steps. I will go over some of the kind of the traps that people fall into when they get started. Some of the same things that I've seen over and over and over again as time has gone by. Remember, I've been in the room from day one, and I've seen really, where people have trouble where they're not. I've shared, we've had some screen shares and stuff like that. One second. My phone's buzzing. Well, just so you know, this is live, so my phone will buzz, and I'll just have to put you on hold and hit the mute button so you guys don't hear me talk about markets and placing orders and stuff like that. So just advance warning, that's going to happen again. So just to give you the script of what to expect there. But again, we'll go over some of the traps and things that people fall into because I've been around from day one, and I've seen where people struggle in some areas. So I have some solutions on how to combat those things. So I will cover that. And if you are a returning CFRN member, you're already an active member, you're in the room, this is a good chance for you to get some more screen time. Okay, learn the personalities of the markets that we're trading. Give you an opportunity to ask me questions. I may have a different point of view, or a different way of explaining things. The idea is to get you comfortable and confident, so you get to that point where you actually want to push the button in a live market. Okay, for some people, it's usually the guys that have been around the markets for a while. They don't have a problem pushing buttons. guys that are brand new, that are still learning, what are futures, what's this, what's that, it takes them a while. Okay, so don't feel bad if you feel like, man, I just feel like I'm not getting this, and it's been a while. There's people on that same path, so don't sweat it. The good thing is you're not going to get any pressure from me or anyone else to say, put a trade on, put a trade on, put a trade on. No, okay? Go at your own speed, and that's what this is about, okay? So that's kind of the agenda for this afternoon. And before I present, I have to go over disclaimers. And with this, I've been around for almost 25 years, so I really don't like to just throw this piece up and just say, hey, take a look at it and put it back under the blanket. I'll go over it because over the years I really have seen the good, the bad, and the ugly when it comes to trading. Okay? And the disclaimer really is a warning flag or a label, especially for those guys that are brand new to our space. Because sometimes the guys that are really knocking on our door, most of them have been, to that guru and this guy and this method, and they've learned this and that, and now they're just kind of chasing their tail. So they kind of get it. They're kind of numb to the disclaimer that I'm going to go over because they've probably lost money. That's why they're knocking on the CFRN door. But if you are brand new, okay, basically what this says is if you don't have a trading plan, if you're not using stop losses, if you're not looking over your trading account, if you're not engaged in the marketplace, if you are not in tune with some of the news items that are going on during the course of the day, this disclaimer will hit you right smack dab in the gut. And again, over my 25 years, I really have seen the good, the bad, and the ugly when it comes to trading. So I don't take this lightly. And so that's why I bring it, right out front. Because, number one, this is an eyes wide open approach. But two, we are talking about a leverage game here. This is a futures market. So, it's great when you're on the right side of things, but it could really be bad if you're not. So it should be disclosed. Okay. The good thing is, on the brighter side of it, is that with CFRN, okay, if you decide to go down that path, you do have a trading plan, right? We're going to go over it this afternoon. There's 3 outlined here, but it's about 4 set of rules. So that kind of checks that box. We have a trading plan. Every trade has an 8-tick stop attached to it. Well, that checks that box. We're going to be on a 4-tick range chart. Okay, so we're going to be looking at the market under a microscope. So you really have to be engaged in the marketplace and where the market's that you're trading. Checks that box too. We're going to be placing orders in a DOM. Okay, we're going to be using aggressive risk management. We're going to be placing stops, trailing stops. We're going to be exiting orders. So you really have to be engaged in your account. So it checks that box. And one of the rules that CFRN uses and outlines is they don't trade around news items. News items are unpredictable anyway, so why would you even take a stab at that and take a guess at what a news item will turn out to be? Honestly, you should be checking your opinions out at the door before you enter the game. You should be trading what's in front of you and what the market is telling you. And so it kind of checks that box too. All right. So again, that warning label that I just put out there is for realsies. All right. People ignore it, and they don't have a plan, and they don't use stop losses, so they become casualties of the market, and it's well advertised. Most people lose. But again, if you go down the path of CFRN, you're gonna check off a lot of those boxes. All right, so maybe you don't become a casualty of the market. Okay, in the end, if you do all the right things that I outlined, yes, there is a chance that something crazy in the world happens, the market goes into a tailspin, you have that stop loss in, you're in front of the screens, you're in the market, and you still have exposure. Okay, that is a possibility. Okay, I've seen it on, maybe a handful of occasions. In the end, the good thing is if the worst case scenario does happen, you know what? You're in front of the screens. You're in front of the tower of this DOM where we do our buying and selling, and you can always get out at the market and cancel. You could hit this hotkey here. At least that stops the game. You're out of the marketplace. You could take a deep breath and say, "Whew, all right, what the heck just happened?" All right. So that's one little piece of the disclaimer. The other thing should be the funds that you put in a trading account should be risk capital. This could be funds that you can afford to lose. It's not going to change your lifestyle. You can continue to pay bills. Okay. That's a big one. The other thing too is why I have it highlighted. It's because past performance is not necessarily indicative of future results. Things can change. The good thing is with CFRN, what I'm going to show you, let me go back here, the chart. The snapshot of this was done in 2012. The setup hasn't changed. It's the same one that Michael uses in the room from day one. Some other setups have evolved over the years. Some observations have been taken away and put into print. But for the most part, this one, it's been around from day one. So that's why I go over it, because I've seen it over and over and over and over again for almost 10 years. So this is the one I'm going to share with you. So that's why I'm going to, let me go like this. Let me erase it. There we go. So yeah, nothing's changed over the year. Nothing's been form fitted or what have you. So, but again, I have to outline some of the obvious stuff, which is the past performance is not indicative of future results. Okay, that was my point. All right, and the second and last slide. Get rid of that highlighter there. This one outlines my relationship with the CFRN. Okay. Basically, in a nutshell, I represent Daniel's Trading. Okay. Bert doesn't work for CFRN, and CFRN doesn't work for Daniel's Trading. Okay. There is a line in between us. There's a brick wall. Okay. Can't commingle the relationship. Okay. My role in this is I support the platform. Okay. Their indicators are built inside the platform. But literally with a few left clicks, you can have the indicators on inside the platform and running. There really isn't a lot of heavy lifting. In fact, I did a video on how to install everything. So once you're in the platform, really, it really is probably 3 or 4 left clicks. It's that easy to get them downloaded and running. Okay. So I support the platform. If you have troubles with the platform or downloading the indicators, you have a live body to call. Okay, you can call me at the desk or shoot me an email, or we can organize a time to meet. We could do a one-on-one screen share to get you up and running. Okay, so you're not wasting time fumbling the ball trying to get things coordinated. All you have to do is call me and I'll work it out with you. Okay, we'll just work it out together. Okay, so you have a lot of support. Okay, if you decide, hey, I am going to be a member, a CFRN member, I want to use the DtPro platform, I also handle the brokerage and the execution. So down the line, if you say, hey, I'm going to sign up for this thing and I'm going to trade futures and I want to do this, you would open a trading account with Bert at Daniel's Trading. Okay, so that's my role. The other role I play is I do this on Thursdays, right? I do mentoring. I help guys that are having troubles, if they're having troubles. I do the CFRN Thursday workshop for an hour. People call me, what about this, what about that? We do screen shares, so I critique a lot of work. People are in the trial period or still learning the method. I give them feedback. So we kind of spoil you at the desk. Okay, so if you're looking for a little bit of hand holding, you can come here and the guy that's going to pick up the phone is going to be me, and that knows the platform and knows the setup. So that's helpful. On the other side, we have CFRN. It's their trading tools. Okay, it's their indicators. They're the educator. They're a third party. Okay, so that means if you decide, hey, I want to be a CFRN member, any money that changes hand is going to be between you and them directly. Okay, anything on their website, anything in their videos, maybe the Logic 247 or the concierge trade alerts, things centered around the passport. Any problems you'll have, you reach out directly to them. Okay. What's fair game? I mean, a lot of times Dwayne's on the radio in the afternoon, right? So he's tied up. Michael might be tied up doing mentoring sessions or planes, trains, and automobiles going back and forth up north. It's fair game to contact me and say, hey, you know what? Can you help me out with this or that? Or, hey, can you just text Michael or Dwayne and say, hey, have them give me a call. Everything's pretty much fair game. Guys know that someone's going to pick up this line, and so people will do that. So I just want you to know that's open. If you have questions about that, anything that pops up, again, just call or shoot me an email. Okay, so we'll go over that. So that covers that. Okay, that's the disclaimers that I have to go over. So now we're gonna get into the nuts and bolts of this thing. Okay, so for the guys that are brand new, this is going to be the trade setup. What you're going to lean on, what you're going to see in the training room. Okay, I'm going to go over the basic slingshot setup. I know on some occasions Michael is doing some of the momentum trades. I think that that's trading 201. So that means I think once you have this down, then you can do some of the momentum trades. Okay, because you have to really be aggressive with the DOM. And so I think once you get the basics down and you get this setup down, I think you can then graduate to some of the momentum trades. Just my opinion, but we're going to go over the basics here, okay? All right. So first order of business is the time frame. Okay, inside the training room, we're on a 4-tick range chart. Okay, so if you have DtPro, best way to get there really is this little drop-down box here. Okay, if you're on the passport, you might be on a 30-minute chart, or you might be on a 5-minute chart, right? The idea is to get to a 4-tick range. So you're going to hit the drop-down box next to the time frame and go down to custom. Sorry about that, custom. A box will open up and you want to select range bar. Make that 2 look like a 4. Okay, hit OK, and then you're staring at the S&P E-mini right now on a 4-tick range chart. Okay, this tip off here is the parentheses in R, R in parentheses here. That's going to let you know that you're on a range bar. Okay, and the big thing about the range bar is that the height of each candle, whether it's red or green, okay, the height is 4 ticks in range. Okay, the range will be 4 ticks. Okay, so that's why Michael can be proactive in placing orders. Okay, proactive meaning this: if you're new, you're gonna hear Michael call out the highs and the lows of then the current bar. Okay, why is he doing this? Okay, he's preparing himself to place an order in advance. If the ES is trading right here at 30.91 and a quarter, and he starts calling out the highs and lows, he's getting ready either to place a buy stop above the market or a sell stop below the market. Okay, he can do that because he knows the height of each candle is going to be 4 ticks in height. If all the rules apply, what rules? These rules that we're going to go over. If all the rules are in play, okay, and we're at a particular point in time where, hey, we're getting bullish or bearish, then he could place an order in advance. And the benefit is, if he has an order to get long up here, if the market takes off, okay, he's going to take advantage of it. If it's an opportunity to get short and he places the order below the market price and the market breaks down, okay, he'll be in a position to take advantage of it to the downside. Okay, that's why he's doing that. Okay, so just be prepared for that. Okay, it's high speed. He does it, but in the beginning there was a lot of conversation in the room. Well, how did you catch that trade? How did you catch this trade? And it needed some further explaining, and this kind of highlights what he's doing. Okay, he's putting an order in advance to get long on a stop or get short on a stop. If that happens this afternoon, I'm going to show it to you in slow motion. Okay, so don't worry, we'll go over that, and I'll give you a quick formula on how to use it. Okay, so you can push buttons a little quicker. Okay, the bottom line is we need to get on a 4-tick range chart. All right, and that's the same time frame that Michael's on. The first trap that people really fall into is when they come down to custom, they select the tick bar and they make that 2 look like a 4. If the chart looks something like this, whether it's the ES, the crude, the gold, or the currencies, okay, you got the first one wrong. Notice there's no parentheses, okay, no R in it. Okay, just make sure it's on 4-tick range and the R, the parentheses, is present, and then you'll know you're there. Okay, it should look smooth. Okay, so again, first order of business was the time frame. Okay, 4-tick range. So now we're going to cut up the top portion of the chart. Okay, so some buzzwords here. The red and blue line is referred to as the MA1. Okay, nothing fancy about it. Just it's called the MA1. The green line is referred to as the BBC. Okay, that is short for bullish and bearish cross. Okay, so together that leads us into step number 1. Okay, which is this. If the MA1 is red and crossing the BBC, that's the bearish cross. If the MA1 is blue and crossing the BBC, that's the bullish cross. So the one that's highlighted here is a bearish cross. The reason for it, the MA1 is red. Okay, so at this point in the game, you're looking for shorting opportunities. Okay, you're looking for a shorting opportunity because that leads us into step number 2, which is this. After the cross, whether it's bullish or bearish, but after the cross, the normal thing for the market to do is to gravitate toward the green line or gravitate toward the BBC. That's what you're looking for, normal. Okay. In the process of that happening, what I'm going to go over is we're going to get in the habit of drawing a trend line while that process is happening. Okay, because it's going to happen. Okay. We're going to get in a position to draw a trend line. So when you're in the training room, one thing you're going to see is Michael drawing trend lines. That's a habit you're going to get into, and a good habit to get into anyways. If I'm drawing them and Michael's drawing them, definitely you should be drawing them. Okay. Why are we doing that? Because we never know if it's going to do the normal thing. We don't know if it'll get to the BBC. Okay. This is an easy and obvious one, but look at here. It doesn't quite get there and then falls apart. If you're drawing a trend line in advance, okay, you could take advantage of this move if everything else is present, if all the rules are present. Okay, that's why you do it. Here's another example of it. It doesn't quite get there, but you get a reaction. Okay, so you're going to get in the habit of, as soon as you get this bearish cross or a bullish cross, what you're going to end up doing is engaging or activating the trend line button. So then it's normal to start drawing trend lines as they appear. Okay, so we have step 1 in play, which is the cross. Step 2, we start looking for normal. Normal is for the market to gravitate toward the BBC. We're looking for a touch. Let it bang off the BBC, but then you're looking for a close in the direction of the trend. If we have a bearish cross, then you're looking for a bearish close. If the MA1 is red, okay, then your candle better be red. That's a bearish cross, okay? That's what you're looking for. And as I said earlier, in the process, we're drawing a trend line just in case it doesn't get there, okay? So we have step 1 and step 2 in play, all right? Now from this point, our eyes are now gravitating toward the oscillator portion of the chart here, which is called the slingshot, okay? Basically, the CFRN trade setup, okay, exists down here in the slingshot. And I'm going to show you why as I break down what's going on down there, okay? So inside the slingshot, which leads us into step number 3, okay, reads like this, okay? The blue and red line is referred to as the cycle. Looks a lot like that MA1 up there, right? Okay. What that cycle is telling you is this. The momentum right now on the NASDAQ on a 4-tick range chart, the momentum is bearish. Why? Because the cycle is red. Okay. If it was blue, like over here, then what this would be suggesting is the momentum is bullish. Okay. If we have a bearish cross and the market has done the normal thing and has banged off the BBC and then has closed in the direction of the trend, and we have a red cycle with a good slope to add to this, like it does here, okay, when everything is the same color, red MA1, a red cross, red candle, a red cycle, when everything is the same color, that stacks the probabilities up in your corner, okay? You should feel confident that the market's going to do what we expect it to do. It doesn't happen all the time. That's why we use stop losses, okay? But you should feel confident, hey, I can rule everything else out, and all I have to do is push a button and take action, okay? But what this is telling us, hey, the momentum is bearish, okay? So you can get excited about this, okay? The green line, okay? This green line, there's nothing fancy about the label. It's just called the green line. The fact that this is pulling away from the cycle along with the price action here, okay, together, it's saying, look, this is just a pullback, okay, in this ongoing downtrend, okay? This down close at the BBC is that extra variable, or that, that, hey, maybe this close here might be the extra link that says, hey, okay, it's tipping its hand here, okay? So this is just saying, hey, this is just an air pocket in this ongoing downtrend, okay? And when that's present, okay, the next thing you're going to do is you're going to get inside the DOM, and if you're brand new, hold on, the DOM is this thing here, this tower. This is where we do our buying and selling, okay? If we do a left or right click in the green, okay, that means we're getting long. We want the market to go up. If we left or right click in the red, we want the market to go down. That's how we make money, okay? But when everything's present, this is where we go in and we left or right click, okay? This is where we take action, okay? So to go back to our diagram here, okay? Think of this as a slingshot, as this is labeled, okay? This is bearish. Its red cycle has a nice slope to it. The market has done the normal thing. It's pulled back to the BBC and we have a down close, and we have the divergence or the separation that Michael is talking about in the slingshot. It's like pulling a rubber band back on a slingshot. That's what this is referring to. Okay? This space that's highlighted here is the divergence or the separation. Okay? All right. All of that's present. What do we expect to happen afterwards? Once we get into the position, what we expect to happen is the green line to at some point to get down into the cycle. Okay? When the green line gets into the cycle, it's time to close the position out. Because what we expect to happen to price, we expect the market to make a new pivot low. It's at this point here, when the green line gets into the cycle, we close the position out. All right, that's my phone buzzing, so hang on. 1 sec. Okay, so this is the point where the green line gets into the cycle. We expect the market to make a new pivot low, and this is where we close out the trade, right here. Why? Because this is where the trade exists down in the slingshot. We expect the green line to pull away, close the gap, pull away, close the gap, pull away, close the gap, until the momentum turns bullish. And then we're looking for the green line to get underneath the belly of it, pull away, close the gap, pull away, close the gap. So what you end up doing, selling the rally, selling the rally, selling the rally, buying the dip, buying the dip. Close out the position here, close out the position here, close out. So you see the same pattern happening over and over and over again. Okay? That's the game plan right there. Okay? That's why the trade exists in the slingshot. It's all going on down here below. The number one, the biggest thing, before we push any buttons, which is not outlined here, is that the market needs to be trending, period. Okay? It needs to be trending. So if we're in a downtrend, if we get that bearish cross, we better be making lower lows. If we get a bullish cross, where that MA1 crosses the BBC and it's blue, the market better be making some higher highs. Okay? This is the number one thing that should be on the top of your piece of paper if you're taking notes. Okay? The market needs to be trending, and this is one of the number one disqualifier. But number two, this is the biggest problem that people, or the biggest trap that people fall into. They get caught in a sideways market and they don't even know it. I'm going to show you one way to stay out of that noise. Okay, so that's the scoop. Those are the rules. All right, there's basically 3. If you include the trend notion, that's 4. Okay, as I outlined, every trade has an 8-tick stop attached to it. No matter what, it doesn't matter what market you're trading, it has an 8-tick stop attached to it. So if you're brand new and you're trading the gold and the crude, that's $80 a contract if you're dead wrong. If it's the S&P, it's $100. If it's maybe the YM or the euro currency, it's closer to $40. Okay, but the bottom line is every trade has an 8-tick stop attached to it. Okay, that doesn't change. Now, today's your day 1. What am I going to learn? What am I signing up for? Bottom line is you're not learning to pick the top or the bottom. And you're not going to learn to trade it from point A to point Z. You're learning to take a piece out of the middle. That's what you're learning to do. Okay? You're on a 4-tick range chart. Okay? That means you're looking at the market under a microscope. That means you're going to have to be in front of the screens. That's what you're signing up for. Okay? You're going to be using aggressive risk management. So you're going to have to be pretty good on that DOM that I just showed you, the tower where we buy and sell. You're going to have to get used to that thing. Okay? Because along the way, we're going to be trailing the stop, trailing the stop, trailing the stop, trailing the stop, trailing the stop until it's time to exit the trade. Okay? So you're learning to scalp. And because you're using aggressive risk management, you're going to have a lot of stop outs. They could be a lot of break evens. That becomes frustrating. Okay. A lot of trades could happen. And like I said, you're going to be in front of the screens. Okay. It's rules based. You're going to have some discipline. Okay. One of the big things that one of the big problems that people have is the discipline part. Usually it's the guys that have been to a bunch of different rooms. They bring those bad habits with them. Okay. And unfortunately, if they get frustrated with it, or they're spinning their wheels a little bit, they go to the bad habits and they break all the rules. If you're brand new, got a little bit of an edge because you're not going to bring that baggage with you. So just an observation. So something to consider. So that's what you're signing up for. Okay. So again, this is an eyes wide open approach. This is to set some expectations. Okay. You know the rules a little bit. Okay. So when we go in the training room tomorrow morning, okay, maybe you hear some of those buzzwords. Maybe they connect with you now, as opposed to on day one when you saw a bunch of spaghetti and Mike's in there taking trades and taking them off, and you're like, what's going on? Why is this happening so fast? And you're just confused. Okay. All right. Deep breath. Sip of water. So now we're going to get into the live environment. Okay. I went into demo mode. Okay. We're just going to keep it so I'm not affecting other positions I have on the live account. It's in demo mode, so I'm going to make that very clear. Okay. So here we go. We're going to look for these rules. Okay. In this environment. So right off the bat, let's go to the S&P mini. Okay. The number one thing I said, okay, the thing that should be on the piece of paper of yours, the top of the page should be, are we trending? So here's the big trap that people fall into. And they do this because what happens is they're looking at Michael's charts, and they're blowing up pretty big because he's got 4 or 5 different ones floating side by side, right? So he might be looking at a chart that's blown up like this, okay? And something that looks like it's trending, okay, under a diagram like this. If you just take a few moments to zoom out, okay, what might look like we're trending, we could be just trading sideways, okay? So consider that. So right now, okay, look at what was happening before. Sideways action here, okay, until we finally broke dynamic support. There was a low here, we broke it. So honestly, it wasn't until I would have said, okay, maybe we're trending now, okay? So for the moment, let me get rid of this. Here we go. The ES is caught in a range, okay? We can break down some of the components here. Here's the bearish cross. The MA1 is red and crossing the BBC, okay? The normal thing for the market to do after the cross is to pull back to the BBC. That's this green line, okay? As I pointed out earlier, we were sideways, sideways, sideways until we broke dynamic support, okay? This was the first down close after the touch of the BBC, right here, okay? Drawing a trend line, that would have been the close, okay? So we had a reaction off the BBC, and we also closed under the trend line, okay? Our eyes gravitate toward the cycle or the slingshot, and the first thing that pops up is this. We don't have a red cycle, okay? This is what we want, okay? We want a red cycle and a selling environment that's got a nice slope to it. This turned blue on us. Uh-oh, what does that mean? Number one, if the cycle turns color on you, the first thing that says to you is that starts to water down the probability. Okay, number one. Number two, the rules say you have to draw a trend line. The trend line has to come into play. So if we get in the habit of drawing a trend line, okay, in advance, okay, if you do that ahead of time, then when it does happen, you're not fumbling around trying to draw a trend line after the fact. Draw the trend line. So if something does fire, you're in a position to take action. Instead of fumbling around a trend line, you're in the DOM ready to take action. Okay? So again, we get the down close, cycle is blue. That means, okay, the probability is watered down. Number two, the trend line is required, but not only is it required, we better close below that trend line before we can consider taking action. We get that. Okay? Now, here's the second disqualifier kind of popping up in front of us. Okay? When the blue line, when the cycle turns a different color and then has a 45-degree angle to it, okay, that means we're kind of swimming against the tide, right? The momentum's against us, okay? When we get faced with something like this, man, that is no trade. We're not pushing any buttons, okay? Because the cycle is blue and it's at a 45-degree angle. As I said earlier, we want everything to be the same color, and we ideally would like a great slope to it, okay? Bad example to start off on the first one, but it highlighted some things there that I was going to go over anyways. It just happened to be the first chart. So we'll see something like that again. So here's a good example right here. We'll go over this again. We have a bullish cross, okay? So we're looking for bullish opportunities, right? Your next order of business is to activate the trend line. And what do? We draw a trend line off the tops. Why do we do that? Because we never know if it'll get, what did I do? We never know if it'll get back. There we go. We never know if it'll get back to, there we go, that's what I want to do. Get back to the trend line, okay? So it gets back to the BBC. That's the normal thing. We're looking for an up close. We haven't gotten that yet, so we're looking for a green candle, okay, before we can take any action. Our eyes gravitate toward the slingshot, okay? What's good about this, we have a blue cycle, so that's good for the home team if we're getting long, all right? And the green line's underneath. So we have that separation or that divergence Michael is talking about. And we have a good slope to it, okay? So the question is, are we trending, right? So I look at this, and notice the first thing I do, I hit the zoom out button. I do that because it allows me to see what's going on over here to the left, okay? Some prior highs and lows, okay? And so that's a good habit to get into. So you should be able to, I want you to do that. One solution to finding out whether we're trending or not is hitting the zoom out button, okay? You'll see a little bit more. And right now, because we have red resistance dots above us and we've had some congestion here, this is not something that's very easy and obvious to take, okay? So I would not tell you to take this trade. However, I want to show you one thing here, okay? And this is how Michael is proactive with his orders, right? If the low is 30.90 and a quarter, okay? If you add 4 ticks to that, then the high should be 30.91 and a quarter, okay? 30.91 and a half, you would right click and place an order. Okay, so let me go over this again, okay? Because we just made a new low. Okay, don't push any buttons, follow along. Okay, in the room, Michael's going to go the low's 30.90. Plus 4 ticks, the high would be 30.91. Add 1, 30.91 is your order to get long. Okay, so the formula is this: add or subtract 5, and that's the price you place the order at. Okay, that's what you do. I don't know why these X's are popping up, but that's what you'd end up doing. Okay, now again, this is lacking a trend, so it's just a bad example. And don't ask me why I get green and red X's here. Something's going on that I don't know about. But so let's try to find something that looks easy and obvious so we can be a little bit more predictive here. Here's the crude oil on the 4-tick range chart. Okay, to me right now we're a little bit sideways here. Okay, so I wouldn't touch it. Okay, here's a good example. Bearish cross, MA1 is red. Notice how we crossed dynamic support. So that should tell us, hey, maybe we're trending now. Okay, we're trained to draw trend lines. We do that because we never know if it'll get back to the BBC. That's the green line here. It doesn't, right? It closes below the trend line. The cycle is red. It's got a great slope to it. The green line is pulling away. It has the divergence or separation. It has all the ingredients to get in there and get short. Okay, after the fact. Okay, let's go over it again. Normal thing for the market to do is pull back to the BBC. Okay, we never know if it'll get there, so we have to get in the habit of doing what? Drawing trend lines. This would be my trend line here. Okay, there is the first down close after hitting the BBC. What color is the cycle? It's blue. Automatic, two things come to mind. Waters down probability and a trend line is required. And it better close below the trend line. So that activates the short right here. Okay. The slope of this. Okay. It's got somewhat of a 45-degree angle. And we do have divergence. That green line is above it. So we have plenty of space here. Okay. In all fairness, if I was faced with this, no, I wouldn't have taken the trade. But it has all the ingredients. Here's the close. And what do we expect to happen? The green line to ultimately get into the cycle. The market makes a new pivot low, and this is where we get out of Dodge. That's where we close out the trade. Okay? Happens again here. There is the down close. Doesn't quite get to the BBC. What color is the cycle? It's blue. It better close below the trend line. It does. Here's the close. Here's one that's flat. Okay? This is flat, not at a 45-degree angle. This is a little bit different than this. Okay? It's flat. That qualifies as a short. The green line is pulling away. Okay? The normal thing for us, for the market to do, is for the green line to ultimately get into the cycle, right? Doesn't quite do it. The result would have been maybe a few ticks. Okay? So again, you see it happen over and over and over again. That just the market needs to be trending. And look what started happening. It started trading sideways. Okay? So for me, okay, if I were going to get short crude again, okay, we better get underneath this low. Okay? Right now, the momentum's bullish. Man, this thing has a pretty good slope to it too, right? That would imply market will probably go up. Okay? So the takeaway is, after the cross, get in the habit of drawing the trend line, at least engaging it, all right, and start drawing. Natural gas. Bullish cross. Why is it bullish? Blue MA1. Normal thing for the market to do, pull back to the BBC. We are going to draw a trend line. Okay? It started off here. It ends up like this. This is our first up close, right? Okay, our eyes gravitate toward the cycle. Red. One thing comes to mind, waters down probability. Number two, is it at a 45-degree angle? Yeah, it's close to it for me. Therefore, if I'm in the cockpit, I'm not pushing the button. Okay? The result is, actually, it does go up. Okay? You'll run into this. Okay? And you'll see a few of these. And then you're going to blame me and you're going to say, hey, Bert said not to take these. More times than not, the result will be a stop out, break even, or some kind of a combination of both or something. Okay? It's usually it doesn't end well. Okay? But that's the up close. Okay? We had separation. Okay, the green line's pulling away like a slingshot, and the normal thing for the green line to do is to get into cycle. Well, market didn't really go anywhere, right? And the last piece of information, are we trending? Okay, we were, because we broke dynamic resistance. Okay, we broke dynamic resistance. If you're not sure whether we're trending or not, lean on the dynamic support and resistance dots. Okay, let me see if I can't find a good example of this. Here's a good example. Notice how dynamic support and resistance are side by side here. And we got lows and highs that are kind of congruent, like a pair of choo-choo tracks here. Okay, that is sideways. Okay, once we take out resistance, then you can consider it. Once we take out support, like here, then you can start considering it. Okay, but again, one way to see whether or not we're trending or not, okay, get in the habit of hitting the zoom out button. Okay, that's what I would do. All right, let's see if we can't find something easy and obvious here. Let's go to the gold market. Gold's getting beat up pretty hard here today. Okay, zoom out, zoom out, zoom out. For me, okay, support, old support here. I'm thinking sideways, not easy and obvious. Okay, little sideways action there, so nothing I'm really excited about. Okay. Okay, so let's do something together here. Let's put something on inside the DOM. Okay, first off, bullish cross. We have a pullback to the BBC with an up close. I don't want you guys to push any buttons. I want you to follow along because I'm going to show you how to place an order inside the DOM. Okay. All right, let me show you what I just did. Okay, let me rewind the tape a little bit. Okay, I just told you we're not trending. Okay, so this might give the trade might give us a fit here, but here's the idea. Okay, couple ways you can get into this market. Number one, okay, we look for the market to pull back to the BBC and we have an up close. Okay, we have a blue cycle. We don't have a ton of divergence here. Basically, we barely have any. Okay, but what you can do is you can left click, okay, to get long. That's one way. Or you can do it somewhat like Michael does, where he does it like this. If the low is 66.20, I told you the magic formula was 1466.70. You can also right click in the green. Okay. And either way, you're long the gold. Okay. Well, I didn't expect that to happen, but hold on. Well, here. Let's just get rid of this. Something must have happened, and that was silly. Let's see what's going on in the market. 30.84. Okay. All right. This was the entry here. Okay. My idea in saying this was this. I was hoping to show you how to create a bracket. Okay. So let's try it again. Okay. See this little Tinker Toy triangle here? That opens up the bottom of the DOM. That allows me to place a sell stop and buy stop underneath the market. Okay. Here's the stop loss right here after the entry. If you want to trail your stop, all you have to do is left click over the number 1 here and drag it up. Okay. Drag it down. All you have to do is drag it. Okay. So what this is a bracket. Okay. So as soon as you get into the market, it will place a stop loss 8 ticks away if you change the factor to 8. Okay, that's what this function does. So as soon as you get into the market, the stop loss is in. And then all you have to do is when the market moves plus 4 ticks in your favor, oops, move the stop to your entry. Okay, so then what you're doing is you're taking off risk. I don't know what happened here. Okay, but something goofy happened and it created some chaos. So look, I'm just moving the stop up right now. Okay, I'm just moving it up. And at some point you're going to get stopped out. Okay. Normal thing for the market to do, right? Green line to pull away, get into the cycle. And guess what? It's going to do it again. All right. So if that's going crazy, then we know probably this indices are going nuts. So let's see if we can do something there. Okay. All right. All right. ES. Okay. We're a little sideways here. So stand up parade rest for the moment. Okay. We got some sideways action. Okay. Chi-Chi tracks with support and resistance dots. Okay. So stand pat. Let's look at maybe the euro. The euro broke out, so maybe we can look for a buying opportunity in the euro. Okay. Here's the trend line here. Well, we don't necessarily have a higher swing. Here's something, a good observation. Okay. Even though we have a spike, like a wick up there, you want to see a close above here. We want to spend a few bars above this resistance before I would say we are resuming the trend. So be careful of that. Okay. So right now, no, the euro isn't trending. Let's go to crude, because crude might be ripping now. All right, I'm searching for things that we can. British pound, notice the sideways action. Okay. We have top here, bottom here. Dynamic support and resistance are right in the middle. Okay. Sideways. Okay, again, here's another example of that. We want the market to make a new pivot high. That's what we're looking for, okay? But here, let's see if we can get it up close. So it has a lot of variables. So let me go over this again. Bullish cross. Normal thing for the market to do is pull back to the BBC. We're getting it. We got a blue cycle and we have separation, okay? We are not trending, so you're not going to do anything. But I'm going to show you again how he's proactive. Okay, this is the Australian dollar of all things. If the low is 69.09, Okay, we're just going to add 5. So at 69.14, right click. Okay, that's it. Now you're being proactive like Michael. Okay, let me show you again the bracket option. Notice when I hit the Tinker Toy triangle option up on top, sell stop is checked off, buy stop is checked off. I would take it a step further and right click over it, go factor in ticks, and make sure these read 8. Notice this says 800. It was set like that. Okay, if you go factor in ticks, you'll know it's 8. So again, if the low is 09, add 5, right click. 69.15 is our entry. 8 ticks below that, 07 is the stop loss. One thing you'd want to do, also if you hit the trading tab up here and go to positions and order management and select working orders, there's our 2 orders working. Okay, watch when I cancel it. They disappear. This is a good box to have open. This will tell you if you have any outstanding orders working. Okay, so let's go fishing a little bit. Zoom out, zoom out, zoom out. Again, we're not trending because we don't have a lower low here, but let's play along. Let's draw a trend line. That's how your trend line should look. Off the corner of the body, the bottom of the wick. Okay, there is the touch. Now we're looking for the down close. Follow along. If the high is 84.75, subtract 5. 83.50, right click. Okay, 84.75 is the high. Subtract 5, and that's our entry. So let's see what happens. Yes, we did break. This is a good question. We did break dynamic support. Okay. So you could say, hey, if you got it blowing up like this, it's game on. Okay, we're looking to get short. All right, so now we're going to cancel this. Okay, so if the high is 85, the low will be 83.75. Okay, still have the separation. Okay, trend line's there. So again, as I was saying, dynamic support was broken. So if you have if you're looking at Michael's chart, hey, this is bearish, right? But if you zoom out, zoom out, zoom out, not really, because we have this left over here. That's maybe why you're seeing what you're seeing right now. Okay, it's got a little bit of firepower in here. All right, so again, no trade. The other disqualifier here that just popped up in front of us, which I'm kind of glad happened, notice how the black step line is piercing the BBC at the time of the down close. That's also a disqualifier. Okay, black step line. So number one, a lack of a trend. Okay, lack of trend, disqualifier. Number two, if the cycle is a different color and up at a 45-degree angle, okay, that's a disqualifier. And three, if the black step line pierces the BBC, that's the third. Okay, usually the black step line is going on at the same time this is happening. Okay, so keep those in mind. I know there's some more rules to think about, but those will hit you in the face as you get a little bit more active and you start staring at the screens a little bit more. Okay, so there's not much going on there. Let's go back to the gold. Nothing there. Look at the Japanese yen. Perfect example. Sideways action. Dynamic support and resistance side by side. Okay, good look at this. Okay, You really didn't even have to hit the zoom out button. That one hit you right square in the face, okay? But look, we ran into this over here, okay? It wasn't until here we could really get excited about buying the yen, okay? And look, furthermore, get rid of our drawings here. This was the first pullback, right? And up close. And look, the slope of the cycle. Okay, this is why this is typical. Okay, that's typical of that kind of action. All right. All right, let's go somewhere else. Yes, sideways. I don't know why I have these X's. Crude oil. Again, we're a little bit sideways here. Yes, I agree. We had some lower lows here. We did break dynamic support. So yes, this is trending in a small way. It doesn't have a lot of energy, but we did make some lower lows because we did break the green support dots, okay? Here's our first close, okay? Another observation, you see how the cycle is flat, okay? Ideally, you want slope flat, especially at the midpoint here. It's 50-50, okay? But that is technically the down close at the BBC after breaking dynamic support. All right. The only disqualifier here is, like I said, this would disturb me. I would not push any buttons. Okay. Just make sure it looks easy and obvious. That's a good solution. All right, let's go over here. I'm going to go to the YM. If we make a higher high here, we'll possibly get long. Okay. Nothing going on there. Maybe it will when we... Here, let's stick around here. Let's see if it happens. The cycle is nowhere close to creating any bullish divergence. So we need a higher pivot. So let's just rule that out. I'm just going through the different markets, so hang on. Even the yen sideways. Let's go to the energies one more time, and if we don't get anything easy and obvious, we'll call it quits. Okay? I went to natural gas. All right, so there's nothing really easy and obvious to dip our head in the water here a little bit. So here's the scoop. All right. Some observations. Okay, the guys that are brand new, okay, you got a good taste of what the setup looks like. Okay, broken down, slow motion, the nuts and bolts of it. Okay, you heard some of the buzzwords, so hopefully that helps. Okay, getting deeper into the live market setting. One of the big traps people fall into is the lack of trend. They get caught in a sideways market. And the reason why they do that, because they got a chart that's blown up like this. Okay, I get it. We're looking at it every day in the training room. The solution to that, zoom out, zoom out, zoom out, zoom out. Okay, you want to see what's going on to the left. All right, that'll help you out. Zoom out button. And if you're not sure, look for dynamic support and resistance dots. Okay, they will be the clue. If they're sideways, if you can put a marker on and it's like this, sideways, okay, that's not trending, that's sideways action. Okay, make sure it looks easy and obvious. All right, so the trending is a big issue. The other issue too is the This is cycle turning color. Like the down close in a bear market, and then all of a sudden we got a blue candle or a blue cycle, but now it's pitched up at a 45-degree angle. This one's a little easy and obvious because it's hitting you right smack dab in the face. It's the ones that start back here before they start that curl up. Okay. See if I can't find a good example of one. Like right here. Okay. Right here. What the heck do I do with that? I don't know if that's 45-degree angle. That looks flat to me, right? Okay. So again, just process everything. If it's a different color, okay, it waters down the probability, all right? If it looks like it's curling up, if it's a 20-degree angle or a 15-degree or 30-degree, if it's not quite 45, okay, no trade. Okay, just eliminate the risk altogether. All right. Yeah, that's less times pushing a button. The house isn't going to be happy with it, but the fact of the matter is, if you're not sure, don't do it. Okay, you're on a 4-tick range. You're going to be staring at 12 different markets. You'll have some opportunity that look a little bit more easy and obvious. That would be my takeaway. If you want to make sure, just make sure everything is the same color. Okay, at least if you're wrong on it, hey, everything was there. It wasn't the one that happened. Okay. What's the other thing here? Cycle, different color. Trending is the big one. And again, the other thing I would do is make sure. Okay, and I have a video on this. Make sure your brackets are set up. Okay, so as soon as you get in, it's going to put an 8-tick stop right behind it. Okay, there's no excuse for not having the stop in. The rules say 8 ticks. Okay, follow the rules. All right, that's a big thing. All right, and I think that's it. All right, I mean that's the nuts and bolts of it. All right, if you have questions because you're brand new, you just call me. Okay, I think everyone that's been in this room has got my phone number, or just shoot me an email. Okay, let me know what's on your mind or if you're having trouble. Okay, so we're going to do this every Thursday for an hour. The guys are in the room are hearing the same things over and over and over and over again. Okay, it's kind of how you have to approach this. Okay, it's the same setup, same thing over and over and over again. Okay, you kind of have to train yourself to think like a robot. Okay, you'll break habits. Everyone does. Don't feel bad. Everyone breaks the rules. You just, unfortunately, you have to lose a little bit to get back on the path. Unfortunately, and then that's it. A side note: if you're really excited about trading the mini Russell and the mini Dow, this thing is whipping around, moving fast. My advice to you would be to change it to an 8-tick range chart, slow it down a little bit. The same rules apply. Okay, the only difference is, and you notice how I have it already set up on my bracket, you have a 16-tick stop, 16-tick stop. Okay, but the same rules apply. Bullish cross, look for a pullback to the BBC with the up close, all the rules apply. Okay, so that's it. If not, hang out with me every Thursday. Happy to have you. Ask questions. We had a few of them today. If not, I'll see you in the training room in the morning. Okay, I'm there in the background. A lot of times they're answering phones, answering emails, sending emails. But if you want to chat, it's fair game.